I'd like to next to our session that will look at the UK market. Very pleased to be joined by Michael Moore of the BVCA, who will chair this session. So over to you, Michael.
Thank you very much, Matt, and good afternoon, ladies and gentlemen. As you've just been told, Michael Moore, Director General of the British Private Equity and Venture Capital Association. Trying not to tell my wife that I'm in the south of France enjoying the beautiful sun and sea when at home in Scotland it's, well, not quite so sunny and certainly not as warm. But we're here with some great leaders from the focus on British private equity, broader private capital. I'm delighted to have beside me here Mark Advani, partner at Living Bridge. We have Tom Wren, managing partner at ECI, and I promised I would try and get this right, Gilbert Kamieniecki from Investcorp. Is that not a bad start?
That's perfectly
That's
balanced, yeah.
Excellent. Our job this afternoon is to talk a little bit about our UK focus. Just to kick us off on that, Mark, just give us a thumbnail on you and where you're focused.
Yeah, sure. So I'm Mark Advani. I'm a terrifying 22 years into my career at Living Bridge. I'm one of the founders there. Living Bridge is a £125 million UK and Australian focused fund, predominantly in the UK. We focus on service industries where we can deliver growth. We also have a £334 million enterprise fund, which is the fund I lead, based in London.
Tom Wren, managing partner at ECI. We are a growth-focused firm, invested solely in the UK and Ireland, and we're around backing growth buyouts in 10 subsectors where we think there's long-term structural growth drivers. So things like digital healthcare, cloud and digital transformation, edtech, places where we think there's exciting opportunities.
My name is Gilbert Kamieniecki. I've been with Investcorp for 18 years, so not quite as long as Mark, but also quite a while. And we manage currently our technology fund 5. So we have had a sequence of funds, and I focus on founder-owned companies where we are the first institutional investor, but it's a private equity strategy with EBITDA positive companies, 10 to 100 million of revenue.
Thank you all very much. Our brief this afternoon is to focus on the UK. Just before we get into the substance of what that means for private capital in the UK, it would be wrong if we didn't acknowledge the fact that the focus in the UK over the last couple of weeks has been on the passing of Her Majesty the Queen Elizabeth II, which culminated for the nation in terms of its reflection in the morning with the state funeral on Monday, to which we were privileged to see so many people from all over Europe and the rest of the world come and be part of the proceedings. Tom, if I might just quickly ask of you what you made of this moment in terms of what it says about Britain and about the way we go about our lives.
Yeah, look, I think it's interesting, which is it definitely was a less frenetic period. Lots of marketing events and other things got cancelled, and therefore people had a moment to pause and reflect. And I think that's probably been most interesting because we've had a change of government in that period, which a lot of people probably haven't noticed, because even there was a great anecdote of some Australian TV presenters wondering who this person was at the Queen's funeral, and maybe she was some minor royal, and actually it's the new Prime Minister of the UK. And I think it's given them a period to reflect before they come out on Friday with their new economic policies and effectively a mini budget. So I think that period of reflection is good for everyone, but particularly good for the UK government before what is potentially quite a big change in strategy and more of a focus on growth. But I think for us as a firm, the UK's got lots of positives around the longevity of its legal system, of the infrastructure, of the professional civil service, rather than a political infrastructure. And I think the Queen probably embodies a lot of that in terms of just, there's a thing, it's been planned for 20 years and it gets rolled out and it goes without any ado, and to global stage, the most watched event around the world ever. And I think that's part of what is the attractiveness of the UK, that stability, that thing, everything changes but nothing changes.
Is that how you saw it, Mark?
Well, yeah, I mean, everybody in the UK has got a personal version of what the Queen meant to them in their life, and mine was my first memory, age 7, making a clay plate for her silver jubilee and standing as a car whizzed through the village with us all waving our clay plates as she went through. And actually, that's what it's really been over the last week, which is remembering who we were at different stages in the Queen's life. Actually, the slightly weird positive of her passage has been how the government and the royal family have pulled together around the Union, sitting next to a Scot, and how joined together Scotland and England has felt over the last week, or two, perhaps the most joint of the last 10, 20 years, I might even argue. So the old firm game got put aside for a moment, and we looked like one country. But business went on and boards went on. We were still managing your money responsibly.
Indeed, and as some might know, but no reason why anybody should, I am a recovered politician, having spent nearly 20 years in the House of Commons before moving on, and now being very privileged to be involved in this world. And the union was quite a lively topic in all the years I was there. It still is, but just on a personal level, I would say that it was a moment of symbolism that was very strong, and we will see where that plays. More immediately, and dare I say more directly relevantly to the audience today and how everybody here leads their lives professionally, Tom, you highlighted that in that brief period before Her Majesty died, the Prime Minister had changed. Liz Truss is now there. And what is striking is that the ministerial appointments that have been made, particularly in the Treasury, the UK Finance Ministry, have been people who are very, very strong on the role of private capital and the need for growth. Were you reassured by those appointments?
Yeah, look, I think our job is to deliver great returns irrespective of the macro. That's what we're focused on, the micro. We're finding great niche businesses that can survive, thrive, no matter what's going on in the macro environment. But I think it's always going to be helpful if you've got people in government who are talking about growth, and therefore their agenda is on growth, and they'll make unpopular decisions in terms of whether it's regulations or other things. You can never please everyone. And I think having the rhetoric coming out being it is about growth, and that there are people in the Treasury who have got more experience of private capital and therefore understand the power of getting private capital on your side and the transformation and the growth in jobs and employment and economic prosperity that firms such as the people on the panel can deliver has got to be a good thing. I think the proof of the pudding, though, will be Friday when we hear what's actually going to happen. And come what may, as Mark said, we'll still be working away, and our job is to deliver great returns irrespective of what happens on Friday. But the noise so far is at least in the right direction.
So for those of you not fully familiar with the British political calendar at the moment, which has been, in fairness, slightly skewed by recent events, there's an almost unprecedented statement by the Chancellor on Friday. Normally Parliament is well long gone home for the weekend. And in that, there's some debate about the status of it. Is it a budget, full fiscal event, as the Treasury might call it, or is it a kind of take note moment? Actually, there's a lot of philosophical things. There's some big numbers out there. Gilbert, if I might just ask you, what are your expectations? How important is this in terms of what it signals as much as the substance?
Yeah, I think I'm sort of with Tom, actually, in the sense that obviously in the UK, one thing that has changed, we had quite a lot of change of government. So for me, every time there's a bit of uncertainty if you get a new government position coming in. I'm German by background, actually, and in Germany we've had much longer governments, actually, than what we've seen in the UK, in particular, in recent years. So for me, the certainty aspect of what the new government will do is proposing, some risk, actually. But overall, business continues. We are investing in the good and the bad times. And there are other issues, I think, that are much more important to focus on, and we'll talk about them in inflation, currencies, and other issues, as opposed to just a new Prime Minister.
And I think the context, what's the new government talking about? Growth of 2.5% in GDP. And I think if I put that in context of our portfolio growing at north of 20% top line, whether the UK is growing at 1%, 1.5%, 2%, or flat, it's not going to have a huge amount of impact on a portfolio that's growing at that sort of rate. Now, it makes life easier, definitely, and it has impacts on how easy it is to get staff or retain people or what have you. But we are, and I think all three firms on the panel, we're driving growth, and that's not about investing in macro 2.5% GDP sort of economy. So whilst as a citizen of the UK, I want them to get it right, and I want it to be positive, those levels of growth are important for tax receipts and are important for investment in public services. We're finding businesses that should be going well beyond that.
Yeah, so I think the debate, Tom, might be whether or not we're going to look forward to a significant narrative change on Friday, or something that could be on the upside really substantial. So we've had I'm sure everybody in the room is aware that Boris Johnson was a populist prime minister who therefore struggled to upset anybody. We now have a prime minister who's unelected and immediately announced that she's happy to be unpopular, and I think might prove to be, but is prepared to change the narrative of the way the country is trying to grow. And as she changes that narrative, I think we have reason to expect a substantial positive change in the direction of deregulation in a pro-business context. And actually, if I look forward 20 years, I think it could materially help drive the returns of the overall industry. But that's a big fingers crossed. Yeah.
And a 20-year frame. If we think about the next 4 or 5 years, those businesses have already been founded. They've been kind of setting themselves on the right path. They've gone through all the challenges of what a political regime is in power.
It used to distress me ever so slightly in politics that business leaders would say to me, we get on despite the decisions taken by politicians, not usually because of them. So let's change to the day job. The so watery of the politics we can come back to a little bit. But in terms of, Gilbert, in terms of the opportunities, your perspective is across Europe. You can choose to invest wherever suits, where the best opportunities are. What's drawing you to the UK?
Yeah, I think for me what's interesting about the UK is actually that you have a strong culture of serial entrepreneurs. And it's, again, I contrast this to Germany, actually, funny enough, because in Germany we had the Mittelstand, which for the longest period of time did not let go of their businesses. And I've lived in the UK for over 20 years, so I've seen both sides of it. And actually in the UK, the serial entrepreneurs are actively looking for private equity or institutional finance as help to grow their businesses. And that, for me, as a culture, actually is incredibly important for our industry and has helped us. And obviously there's a strong Anglo-Saxon side to the US, so expanding companies from the UK, pan-European, but also cross-Atlantic to the States, which is a lot what we do, is much easier from a cultural, language, and just affinity perspective. So that's one of the big advantages UK has and will always continue to have, independent of politics, as you say, Michael.
Mark, you obviously looked over the investment horizon for many a year, if I might put it gently. For you, what has kept you focused on the UK?
Yeah, I mean, I think Gilbert said it beautifully, which is that we have an Anglo-Saxon capital-driven economy which embraces creative destruction, so it's happy to see change, and we have a high education rate and the ability to build fabulous businesses, but then an entrepreneurial culture that rewards the success. So you are able to spin the wheel of running successful businesses multiple times. Times change, and I'm sure we're going to come and talk about the economic cycle in a second, and we're facing a trickier year or two ahead across Europe, across the globe. And I think important to have a spread of industry sectors that we serve. Tom, I love your 10. Actually, we only serve 4, but much broader industry sectors. And what we'll try to do is, and always will do, having navigated through several cycles, is skew towards defensive sectors where it's still possible to do deals in a more difficult environment. Consumer looks tough, I think, for the next year or two, readably tough. But places, we were chatting about cyber as we came in, Gilbert, that's a long-term growth driver. Healthcare is a long-term growth driver as we restructure the way healthcare is delivered. Just being able to pivot within broad themes, using the pattern recognition of previous cycles to be able to build good businesses serially.
So, as an association, we are 40 years old next year, which I think reflects just the way the industry has grown. It's unrecognisable now from where it was back in that day. It's probably unrecognisable from 5 or even 10 years ago. How important is the ecosystem of private equity and venture capital in the UK to your ability to go out, find the opportunities and so on? Is that a factor? Are businesses more open to the role that private equity can play than they were 5, 10 years ago?
Well, not necessarily more than 5 years ago, probably more than 10. I think in general, and Gilbert, this would be easiest for you to comment on, I suspect, Most entrepreneurs see their role as passing within their businesses. So nearly all of them do not expect to pass on their businesses to their children. It's very, very rare to see that. And private equity provides a fundamental solution that most people now would be aware of. What has changed, I think, over the last 5 to 10 years is the skill of the private equity firm reaching out via a very well-established professional community, but also direct to the corporate universe to get to know businesses, either to acquire them off market. Actually, in the fund I run, the last 2 investments we've made have been entirely off market, or to build a relationship to help persuade that entrepreneur to convert and fall into your arms over time. I think in many other countries, that is just much harder to pull off, and certainly across Europe. I mean, Gilbert, you probably...
No, I agree. I think, my day job is actually convincing founders, if you like, to be good partners with us, or for them to let us partner and be good custodians for their business, I should say, where we actually take majority or controlling positions alongside the founders. And the only reasons the founders are doing this is because they recognize there's a need to institutionalize their businesses. Most of the founders we deal with actually have already passed on. They don't operationally manage it as CEOs. They're actually more, because I do technology deals, they're more likely to be CTOs, or very technical minded. And they need more institutional, professional kind of help to build a finance function, to build actually sales and marketing, and to internationalize, do add-ons. And you have these managers that they want to do a lot of add-ons, they want to push to different countries. And that's really the gap that we fill, and I think it's needed for the founders, and they recognize it as help. And the fact, maybe last comment, this serial entrepreneurship, this idea of building a business and actually culturally ingrained, it's quite happy to pass on that business to somebody else and to sell this company and see this as a success, is pronounced significantly more in the UK than in Germany, for example, where it's more about passing it on to the next generation and the children, actually. At least historically, that was a thing. I think it's changing in Germany too, but given this UK panel, I think you had a big advantage in the UK with that history.
I also think there's a bit which is by freeing up capital. So if you're passing on your family business, you're not creating that capital, which the founders we back will take much bigger risks than we do. None of us are there putting £1 million into an early stage startup business. The founders we're backing and giving them capital to de-risk their position, to help manage their succession, that's what they're doing. And they're taking their experience of bringing on professional investors, they're creating that economy. So I think that then is seeding the next generation of businesses that might be, single-digit million EBITDA that then become interesting to us. And I think that the combination of the Anglo-Saxon culture that people have talked about with significant deal flow, meaning that you have a choice between an InvestCorp, an ECI, a Living Bridge for a particular deal. And I think some LPs probably see that as, it's a very competitive market. I see it as being high deal volume, and there's the right partner for a particular founder or management team, which encourages more people to do deals, because they'll find the right partner that says these people have got the right culture, the right experience to do a deal with us, rather than being, it's a niche market, low deal volume, not much choice, maybe I'll just sit tight. And I think, therefore, that velocity of deal flow is much higher in the UK. And we've got the ecosystem advisors who can help entrepreneurs feel comfortable when they're doing deals, that they've got the right advice, because these people have sold multiple businesses to private equity. I have confidence I've got a great person sitting alongside me to get a sensible outcome, which I don't think you have in other geographies.
What you've described from some of the examples, I know it's pretty high level, but it's about how private equity helps to kind of reinvigorate, take well-established, successful businesses to another level, or develop new bits of the economy to do this. And that, I'm sure, is exactly the same as it would do elsewhere in Europe. But Tom, you were talking about how you're focused on the UK and Ireland. Is it within the UK still as concentrated as it might have been in London and the southeast, a traditional view of where people invest, or are you finding more opportunities across the UK, or is that still work in progress?
I think we've always had this. We've always had a Manchester office. Well, I say always, for 20 years, and predates me joining 16 years ago. And I think we've always found there are lots of great businesses that just, we've backed a business in Wrexham in Wales. We've got several businesses in the north of England. We've had back businesses down in the West Country. And I think businesses are founded where entrepreneurs happen to live, and they set their business around the kitchen table. We're often backing businesses that are not venture capital backed. They started as bootstrap businesses. they're around the kitchen table, they've grown up, and then they move to an office, and therefore they're where the founder was based. And I think that's great, and that's what we're bringing, the experience of having done whatever it is they want to do, expand into North America, make an acquisition to improve product, think about that founder transition. It's pretty scary. I've not done it before. All my 95% of my net worth is tied up in my business. If I get this wrong, that's quite challenging. How do I do that? And to de-risk a little bit from a capital perspective and have a partner who has done this lots of times before is quite encouraging for people. And I think that's wherever you are. I think there is a bit where some of on the larger deals side of things, the legal and investment banking kind of tends to be in the UK. I think at the mid-market where we tend to operate, there's good regional hubs around the UK.
Okay, that's the good opportunities and encouragement for everybody. Mark, you did say earlier on we would turn to the macro environment. One of the features of this industry is always that it invests throughout cycles. It keeps going on. But is there any pause for thought, given the background, what we see happening out there?
Yeah. So none of this is fortune telling. We can all see a couple of major challenges looming. So inflation is shocking. Not the highest I've seen in my life by any means, but it's very high. And we have odd patches of labour shortage, which is mostly a post-COVID challenge. But inflation is the primary thing, and it's putting a lot of pressure on the consumer. And of course, we also have a looming energy crisis from which the UK public and UK business is being temporarily sheltered, but in the long term is a structural challenge that will need resolving. Experience would say, having seen 3 cycles through with my current partners, I don't think we're looking at a dot-com situation. So I don't think we're looking at 2000. I don't think we're looking at a collapse in technology valuations. In B2B technology, B2C technology's got some different challenges ahead, I suspect. There may be some value opportunity as the economy shifts more towards software over the next year or two. I do think the consumer is going to be stressed, and what we are doing is putting a lot of time into helping our portfolio manage inflation wherever it can, either through taking some cost out, through managing its staff base, whilst also putting time into helping it manage its labour base, through working harder on employee value propositions, working harder on recruitment, which I know you'll be doing exactly the same.
100%. I think that the benefit of, I think it would be easy for our portfolio, I think, to, as one of my colleagues said, sleepwalk into this. With COVID, it was very clear, bang, overnight there's a problem, you need to address it. I think cost of living and inflation are things that will eat into kind of businesses if they don't think about it. They're not thinking about how do we automate tasks, how do we think about retaining our best people. And I think we're certainly feeling pleased that we've got the smallest portfolio we've had certainly in my lifetime at ECI. And I think that the macro environment, whilst I think you need to navigate it, I think private markets feel like a great place to be sat to navigate those challenges rather than public markets. I think being in control, being able to have the benefit of multiple cycles of investing, be able to take active ownership, definitely feels like a good place to be. And I think it is definitely going to throw up opportunities. We've already seen it with, if you're a large, the volume of corporate divestments over the year to date has been 3 or 4 times what it was the year before. Because if you're a large corporate dealing with these problems in a listed environment, your only real option is sell off some attractive assets to help pay down debt because your interest bill is going through the roof. So I do think private markets are well placed to withstand what will undoubtedly be some challenging macro pictures, but also to take advantage of opportunities from those that haven't been as thoughtful about their capital structures or their business models.
Yeah, I agree with that. Just to add maybe 2 comments from my side. I think in technology in particular, there's a bifurcation between loss-making tech companies and EBITDA break-even positive tech companies. So that is actually really remarkable how valuations have changed. So obviously, if you don't need to raise money at the moment, you have an EBITDA break-even business or positive, which is really what we focus on, then actually valuations have been somewhat more resilient, where really you have seen the significant decrease in valuations in tech, and it's important to look at that as a pre-IPO or heavy loss-making, where there are financing rounds that will need to happen. in a very short period of time. And by the way, I don't think that has yet shown fully in the mark-to-marks, because these companies, many of them had maybe 6 months or so runway, and that's going to come, I believe, in Q3, Q4. So I think that's one thing on tech. The other thing, obviously, is leverage vis-a-vis no leverage. Most of my companies, or our companies, are sitting, I think, here on net cash positions, actually. So from an inflation perspective, that has significant impact on interest. And the more, later stage PE, which more reliant maybe on, in some cases at least, on debt, I think that will have a more significant impact to come. And the last comment maybe on inflation is actually there's, obviously it's a risk and it's an issue, so I'm not trying to belittle it, but there is an opportunity with it. So most recurring SaaS tech businesses have been able to pass through substantial price increases over the last 6 months, way beyond what we have ever seen in the past. So we've had companies that have just increased because they're mission critical in nature, so companies need to use their products. They have seen 20 to sometimes even 30% price increase, which again is short term. I don't think this will be there for long run, but at least short term has helped with the inflation. And the other comment on inflation, you can change the salaries of your employees. And this is, by the way, as much relevant for private equity as it is for our portfolio companies, because you can actually, instead of say it's 10-20% increase for everybody, you can actually try to be a bit smarter around how much increase you give top performers vis-a-vis the bottom performers, and actually use it as a beautiful opportunity to incentivize top performers with a higher increase than even inflation would warrant. So be a bit smart around that. I think it's a great opportunity at the moment we're having.
That's excellent to hear. Can I just turn to one last big topic that hasn't dared speak its name thus far, that of Brexit? We're kind of conscious that in the UK it's happened, it's been, and people are getting on with their lives. Elsewhere, people keep wondering how much it has changed. Mark, how's it been for you so far?
Well, to the extent I'm no longer arguing with my wife around the kitchen table every Friday night, it's been a positive joy in that the argument's over, even though she won. That nothing really happened is the answer. So the economy continues much as it is, because we adopted most of the EU's regulations and we adopted a similar structure to life. Our portfolios companies have grown as is. The only place I would say we've seen a material change has been, and it's very difficult to disentangle from COVID, some industries which took lower cost labour from some countries. So agriculture, we've struggled with pickers. Our care homes feel a bit understaffed, and hospitality, where Southern Europeans did provide a really good labour force. So on occasions, the service in the restaurants isn't what it used to be. That's a shame. Sometimes people call me mate. Not ideal, but in general, the economy continues as it is, and we are, I think, coming through that as the government relaxes the immigration rules to let people in for the key roles.
Tom?
I think it's in, but we see a lot with probably more our continental European LPs, where the minute Brexit's on the news, and it's predominantly to do with Northern Ireland and trade processes, there's a natural concern: is this having a real impact? Is this going to impact the portfolio? And unfortunately, it's terrible for Northern Ireland, but Northern Ireland makes up 2% of UK GDP, so it gets a lot of noise in the press, and they need a solution. They definitely do. But for most of our portfolio companies, which are services or technology driven, they're not trying to sort of import some goods from somewhere, which is probably more problematic with China these days rather than anything to do with Europe. They're not seeing any real impact. And so I think that noise, which is there in the press, is very distinct from. There will be practical stuff. We as a GP, we now have to operate slightly differently if we're engaging with European LPs. Rather than just having one home market that can regulate everyone. So that's an irritant, but we deal with it. And I think with our portfolios, other things like China supply chain or inflation are much more topics of conversation. I don't think as a portfolio that we've talked about Brexit since pre-Brexit, when we were just thinking about, is there going to be an FX impact? And we need to make sure we're hedged since that. And I think that's probably a large part of that's the same for a lot of parts of the UK economy, unless, as Mark said, you're in certain areas like agriculture, or you've got a lot of low-paid employees, and therefore mixed with COVID, you've got harder to find people, harder to find talent.
Last word, and if I may ask it to be just about a word, is this more about friction than blockages? Gilbert, when it comes to your experience so far?
About, you mean Brexit in particular,
Yeah.
in general? It's a distraction, to be honest. I've seen it in fintech. I can't summarize it in one word, but in fintech, you now need to be multiple regulations in multiple different countries. But I do not see it as a major issue, Brexit. In hindsight, I was much more afraid before it happened. So
There we go. Thank you all very, very much, to Gilbert, to Tom, to Mark, for your insights, and we look forward to continuing the conversation in the bars later on.